Vacancy is not all the same in all locations.
That's right.
Okay,
Yeah.
so as we move, Seattle, biggest problem, Tacoma, second problem, Kent's a little better.
Yeah.
Right?
Yeah.
And then as you go south, it's a little bit better again.
Yeah.
Obviously not a lot of new product, that's why though.
Right.
So the Olympia one is a low number.
Welcome to our Industrial Advisors podcast. Bill Condon and Matt MacGregor. We're doing a 5-minute Friday today on vacancy, and vacancy being deceiving.
Yes.
Because vacancy is deceiving depending on size, depending on location, asset class, a variety of different things. So let's start there about vacancy being deceiving.
It is deceiving to your point, because if you look at the market wide and you take all the major firms' vacancy, let's just say the average is around 8.4%.
Yeah, market wide.
Yeah.
Yeah.
That would say, my gosh, your market is slow and unhealthy, right? But man, you got to dive into details, because this data shows very different results. And the first thing I want to say before we dive into that is, when we do these podcasts, we typically don't just take Colliers information, right?
Right. We're checking it with other sources.
Yeah, I would say the way Colliers record stuff is CB and Colliers are the closest. We pulled Cushman's this time, not knocking Cushman's, but their numbers are going to be very different because people draw lines different and they track stuff different.
That's
Cushman
right.
tracks it very different.
Yeah.
So just real quick, going over when we talk vacancy, I'm just going to go over the three firms and what they said. Okay, so close in Seattle, Colliers 9.4, CB 9.9, Cushman 8.2, quite a bit different. And I think they're drawing that line in Seattle at a different place. Kent Valley, 8.1 Colliers, 7.1 CBRE, 6.4 Cushman. So again, Cushman way off, and then not way off, but way off of the other two. Tacoma 8.7 for us, 9.8 for CBRE, and 8.3 for Cushman. So first, all firms track it differently depending on the number of buildings they're tracking and where they're drawing the line.
And when leases actually get signed.
Ours is a little different. So we record when the lease gets signed. We take that building off the market and absorb the square footage. Everybody else records it upon occupancy. So let's just square that away.
Yep.
Let's get that out of the way now.
Yeah.
So now let's talk about size differences. We know location now, and before we jump too far, let's just talk location, because the biggest problem location continues to be Seattle. Let's just say the average between the three firms is somewhere in the low 9s. And then Tacoma would be second, somewhere in the high 8s. So those are your two problem markets. And then, Kent's a little healthier, period.
Yeah. And, Seattle has a big building in a smaller submarket that's sitting vacant, 700,000
That throws that
feet.
number off.
That brings that vacancy number up.
That's right.
Yeah.
Okay. So vacancy is not all the same in all locations.
That's right.
Okay. So as we move, Seattle, biggest problem, Tacoma, second problem, Kent's a little better.
Yeah.
Right.
Yeah.
And then as you go south, it's a little bit better again.
Yeah.
Obviously not a lot of new product. That's why though.
Right.
So the Olympia one is a low number. That Olympia Thurston County Basin is a lower number.
Also, you talk about it being different. Then, while the Kent Valley number might be lower than Tacoma, the actual number of availabilities is going to be higher because the square footage is typically smaller in the Kent Valley than it would be Tacoma.
That's right.
Yeah.
Now, we talked about the other factor that vacancy is deceiving, size. This is the bigger thing.
Yeah.
Because the one thing I will say, and it's commonality between all the markets, is where the vacancy is.
Right.
Okay. Big.
Yeah.
Okay. So starting again, and this is just Colliers information. So let's just say
it's the most accurate.
It's the most accurate, quite clearly.
Yeah.
Okay. So when we start in close in South Seattle, to your point, well, it's all in a couple of buildings, but vacancy under 200,000 feet ranges from 6.7 to 6%, so fairly low.
Yep.
When you get to 100 to 200 is 8.5, above 200 in South Seattle is 11.7, but that's one project.
Yeah.
Right? Okay, but all the vacancy is in those two sides. 100 and greater.
Right.
Okay. You drop down to Kent, again, check this out. Between 10 and 25, your vacancy is 4.3.
Yeah,
That's
it's the lowest. Yeah.
landlord market.
Yeah.
Between 25 and 50, 4.4. Right? Now, 50 to 100, 9.2. 100 to 2, 9.8. And 200 plus, 10. So again, all big.
Yeah.
Dropping down to Pierce County, same thing, but lower. 10 to 25,000, 2.4, and then 3.1 for 25 to 50. Right back into 8.4, 8.8, 10.7 on the large stuff.
Clear story.
Right? Yeah.
As you get bigger, your vacancy goes up.
That's right.
Yeah.
So, and then talking just briefly about number of buildings. Unfortunately, we took a dip last quarter. Now we're shooting back up.
With deliveries.
57 total buildings available between 1 and 200 market-wide. Yeah.
Yeah, 57.
Yeah, 57. 400 construction. So if nothing leases, we'll be in the 60s, which won't happen.
Right.
But boy, I thought we were going the right direction, and then here we are.
Yeah,
again.
I mean, the challenge is like subleases are popping up in that size range.
Like every other day.
Yeah, so it's bringing that number up.
Yeah, it's painful.
And it's making some of those landlords, main landlords, compete with subleases, which driving some rates down if you
That's
want to
right.
get that deal. So it'll be an interesting one to keep an eye on for sure.
Yeah, exactly. So, large vacancies down up north and down south. That middle market seems a little bit better, but kind of the moral of the story when you're saying dissect the market. And boy, if you can break product under 50, do it.
Well, it's why you're seeing a lot of landlords in that 100, 150 range say, let's look at demising this building to accommodate tenants that are in that size range that's more active.
That's right.
So thank you for listening to our 5 Minute Friday.
Happy
on
Friday.
Vacancy.